Hello, it's Nathan Ruffty. What a big week for the mortgage industry last week. We had three big news announcements that I want you to be skeptical about. One was Fannie Mae dropping their minimum credit score down from a 620 to nothing. That's just not going to happen. When I started this business 30 something years ago, we had to grade people A, B, or C, A plus, A minus, B plus, because we didn't have a credit score. So we had to judge everything on a credit history and what the credit report said, and also on their cash reserves, long-term on their job, and the debt to income ratio. So that's how we gauged a loan, is on that paperwork. And then credit scores came out. It was easy to go, oh, cool, 680, 700, 740. That was easy to put that person in that box just based on the credit scores, not the debt ratio or anything else. So I don't think Fannie Mae, if they get rid of it, great, but that's going to be a small bucket of people that are going to fit in that criteria. But you got to deal with Freddie Mac, FHA, VA, and USDA, and all the non-QM programs out there that are still going to require a credit score. If Fannie Mae gets rid of the credit score requirement, minimum right now is 620 down to nothing, they're not going to let a borrower with no credit score come in with a 3% down, a 5% down, and a debt ratio high. That's just not going to, we all people in this business, in this industry know that. They're not going to take away something and keep all this minimum requirement the same if you had a 620. If they take away the credit score, they're going to tighten all these other buckets. So it's going to be very, very limited on people who are going to qualify that program, even if Fannie Mae erases the credit score requirement. We'll see. Skeptical, but we'll see. The other one that came out was a 50-year mortgage. I think the Trump administration is talking. It would be okay in the short term, but long term, is the consumer really building equity into their home when that loan is stretched out for 50 years? You know, we got 10, 15, 20, 25, and 30-year terms. All that 50 years going to do is shrink that mortgage payment a little bit to help with the debt to income ratio. That's all that's going to do. People are like, yeah, my payment's going to be different, or lower. Would be. It's not going to build equity, and that's what you want. If you can't afford a 30-year term loan, but you can on a 50-year term, you got to rethink your priorities here. A 50-year term sounds good. I think in the long term, it's just not going to be beneficial to the homeowner. They're just not going to build equity. Right now, we need to move homes, and they're just trying to figure out ways to put people in the homes. Some of these things that they're talking about is not going to help our business. Anybody that's been in this business or heard about the big meltdown, I think the no credit scores in a 50-year term is going to probably head in that direction. Also, the portable mortgages, where you can move your existing loan onto a new home. It's complicated when I was reading that, so I don't think that's going to happen either. Take your existing loan and move it over to a new purchase. Who's going to buy these loans? And that's the other aspect of it is us in the lending industry will fund the loan. We got to find investors that are going to buy this type of loan. I don't know about you, but just because it's there and Fannie says we're not going to have credit scores, you got to find investors that are going to buy these things. And how many of you people would go, yeah, give me that loan? Someone with no credit score, doesn't have a history of anything, and has 40, 50% debt to income ratio, and put 3% down, 5% down, that loan may not perform. It may not. I don't know. But those are the three big news things that came out last week in our business. It's the 50-year mortgage, the portable mortgages that you can move a loan to another loan. That's not going to happen. One investor is going to take that on. And a no credit score with Fannie Mae. So we'll see how all this works out. But that was the biggest news from last week. I don't get excited. I've gotten phone calls from a couple of builders and borrowers that say, oh, I heard about this. Well, we all heard about it. It hasn't come to fruition yet. Nobody's putting down on the guidelines to say this is what a 50-year mortgage we're going to do. This is what portables, this is how it's going to function. And here's Fannie Mae. We're going to have no credit scores. They'll bring the loans on. So we're all getting wind of this information too as well. We just got to find people that are going to buy this type of loan. So don't get excited yet until these things made it to the mainstream borrower, to Main Street, that we all understand these programs, that are going to be able to deliver these programs, be able to fund these programs. If these unique knockoff programs are going to be out there, there's going to be a small bucket of people that will be able to qualify and fit in that bucket. We in the business and the industry know that if something good comes out that's going to help people, it's going to help a small percentage of people. That's all it's going to do. We just got to stay the course. 30-year mortgages, what's wrong with that? 15, 20? Nothing wrong with that. You're building some equity. Horrible mortgages. I don't know any lender that's going to take on, yeah, bring that loan on over here and keep your 3%. I just think the industry is trying to drive ways to bring more business up because it's a little slow right now. So they're trying to figure out ways that can get a little bit of people back into the housing market. We just, rates got to come down. Housing prices got to come down. It's got to do its natural course of the economy that we all know that it's going to correct. It might take a year to do that. This thing's have a shock to the system. And then later on, it's going to hurt us in the long run. So we should just stay the course. My name is Underwriter with Canopy Mortgage. Hopefully you found this information useful. Don't get excited about it yet. And we're just all learning about it as well. Have a great week. And if you need any mortgage needs, give me a call. All my contact information is below. Nathan Rutter with Canopy Mortgage, 909-503-5600. Thank you very much.